I would say the operating section is definitely the hardest. The second hardest is this investing section because you're gonna have to infer. You're gonna have to do some T account manipulation to figure out how to do this section. Okay, so again, this section includes the purchase of PP&E assets. Um, the T accounts you're gonna have to look at are the asset account, accumulated depreciation, and you're oftentimes going to be given bits and pieces of information that you'll have to put into the T account and then figure out what the missing thing is. Okay. If you remember this slide, uh, it will help out a lot. Okay. Um, you can see here that there's a disposal of assets. Okay. So this is going to be uh, basically potentially related to cash. It depends on what the transaction was. Okay. If you just disposed of the thing and like just threw it away, obviously it's not going to appear in cash transaction. Okay. What if it was disposed of the asset for, and there was a $10,000 gain, for example, right? Or if you dispose of the plant asset for $50,000, okay? If you did that, then you have to figure out what the journal entry was for the disposal, which you have some information here. You'll have to incorporate how much you gained or lost and then figure out how much cash was transacted. Sometimes you'll be told how much cash was transacted and you figure out the gain or loss. And so it's all about like there's 4 variables and you're given 3 pieces of information. You got to solve for the last one. Okay, so that's a lot of what the homework problems will be about. But really it's understanding this framework of how the asset and the accumulated depreciation accounts, and also this depreciation expense, okay, this is coming from the income statement. That's also going to appear here. Um, so again, you're likely going to be given a balance sheet. You're going to see this because this will be the prior year. You'll see this. You'll see maybe this from the income statement. And you'll have to then figure out what these T accounts look like. And it basically follows this format where you have PP&E assets, you have some amount that was acquisitions, some amount that was disposed. This disposal is related. Remember, you're going to get rid of the asset in the disposal at its cost basis, and you're going to get rid of the accumulated depreciation. This is from chapter 9, right? When we talked about disposing of plant assets. Okay, so you're going to have to tie in what we covered there and the journal entries and like kind of how they affected the T accounts. And now you're going to suck out the information from that was related to cash, because there are some instances where the disposal there was no cash. The times that there was maybe also a gain or loss, and you'll have to kind of tie all that together to figure out how much cash flow was transacted. But yeah, I would say just pay attention to this. You have beginning balance, ending balance. Acquisitions are obviously going to be a debit to plant assets. Disposals will be a credit. For accumulated depreciation, again, the disposals are going to be a debit. You're also going to have beginning and ending balance. These two will also appear on the balance sheet. Okay. It's just that some of this information you're going to have to ascertain from either extra information that's given to you. This you'll have to understand it's coming from the income statement because this amount will appear in the income statement. Okay, so fitting all this stuff together now is, this is the challenge of this particular section. Okay, so let's look at an example. So you have these T accounts. There is a $10,000 gain on the sale of some asset that you disposed of. Okay, so the first question is, think about what the journal entry for the disposal of the asset was. Okay, you have enough information here to figure it out. Cash is involved, and for the purpose of compiling this statement of cash flow, you basically need to recreate the journal entry for the disposal. Okay, and cash will be part of that. And that amount, whatever cash came in, it's going to be a debit to cash. Because again, you're selling this asset, you're disposing of it. That is going to appear on your statement of cash flow. So why don't you all take a second and try to figure this out? Try to figure out what the journal entry was for the disposal. So debit cash 50. Okay, let's just do the rest of it to make sure that your journal entry is going to balance. Okay, so if you're debiting cash 50, what are you crediting? Or are there other debits? Okay, so let's just this looks right. So look, this plant asset 55,000, that's here. This credit, or sorry, this credit is here. This debit is from here. This 10,000 is from this information that was given, $10,000 gain. And so the cash is kind of like filling in to make the journal entry balance. So yeah, this looks right to me. So let's just see. Yeah, so accumulated depreciation 15, gain. Yes, so this is 50K. So yes, yeah, thank you, Tyler. That's great. Okay, so now that we have this cash from the disposal, what is our investing section going to look like? What investments? What are the components? We have acquisitions and we have disposals. So what are we going to put? So we have cash flow coming in. It was a debit to cash from disposal of assets, 50,000. And then what else? What else? What is the investing section showing? It's showing definitely disposal and the cash coming in. What else? Acquisitions, exactly. Okay, and unless it says otherwise, you can assume this acquisition was done with cash. Sometimes it'll tell you it was with a note payable or whatever, but we're going to assume it's cash. So is this going to be a positive or negative? Negative, right? We're spending money, cash is leaving our business, and we're getting some plant asset. So we're basically going to have cash flow from investing activities, cash flow outgoing, 310,000 for acquisitions, cash flow incoming, 50,000. So the net is going to be 260. Okay, but really the big challenge is step one, figuring out what the journal entry is based on the information, and then having this understanding of this framework of where all the different pieces related to assets are going. Okay, because there will be instances where it's easy to forget about this. Okay, so you have to be very clear. Each of these pieces is important. Okay, so make sure you're like when you're having to do that part of the the statement of cash flow, the investing section. I would say open this up. Make sure you're clear about whatever all the pieces are. You're gonna have to use the balance sheet. The balance sheet is going to give you this information, this, and this, right? It's going to have end of the year, beginning of the year. So give you the balances. Um, you'll use the income statement to get this. And then you will then have to figure out all this middle stuff, these changes, okay? Because they're related to cash. So though neither of these accounts is cash, you can assume that cash was involved. Like for example, to buy these assets.